I wanted to make a quick market update for you because, as you can see, suddenly now, about a week later, the mood has suddenly changed. We went from where everyone was worried about a crash, everyone was worried about impending doom, that something horrible was about to happen, to, oh, forget all that. There's nothing going to happen. And what has actually changed? And what has actually changed is that the first thing that's happened is that we've had some influential companies report earnings. And those companies are companies that are in the financial sector, in the technology sector. And that is showing people that whatever the ideas were that were driving the selling, and whoever it was that was driving the selling, and we will never know, they are not required to identify themselves and tell us how they did their selling, why they did their selling. We'll never really know. Whatever it is, we can know that during a period of time when companies were largely not allowed to talk about their business, not allowed to talk about their results, some number of people chose to sell into the market and drive prices down very, very steeply. The obvious thing to look at it, say, that seems a little suspicious, doesn't it? Which is that they drove these stocks down 15, 20, 25, in some cases even 30%. And now you can see these stocks are being bid back up. Obviously, any number of people sold, were forced to sell, felt compelled to sell, were afraid and sold. And now they're looking at what's going on in the stock market and thinking, I wonder if I should have sold. Wow, here's that stock. It's up 5% now from where I sold it. And with each passing day, as companies come in, and as what I believe and what I've been telling you, which is that I believe there's nothing wrong with our market. There's nothing wrong with our economy. Our economy is growing. Interest rates are rising. Yes, President Trump is trying to get other countries to be fair with us in the way that they trade with us, that it is completely unsustainable for us as a country to run these large trade deficits. And he's looking to balance that, where they buy stuff from us, we buy stuff from them. That's free trade. And in that case, there would be some sort of balance. The United States would run a trade surplus with some number of people and a deficit with a number of people. So the idea of a massive trade war dislocating the entire world economy, I believe, is really something that is very, very unlikely based on what is going on. And so those are the biggest fears: interest rates destroying our economy, trade wars. And then there's just any number of fears that have just been things that people have been willing to take seriously, even though largely there's been no case for it. And in the way that I look at the world, for us, what really matters are really three things, which is that stock prices will go up as long as these three critical factors of going upness are in place. And one is that scarceability. In other words, stocks need to be relatively scarce. And in my total wealth presentation, I showed you that stocks are scarce, which is that we've had a 50% decline in the number of publicly traded companies that are out there, approximately. The number of shares outstanding per company, even after when you consider that the stock market has virtually doubled or tripled since 2009, the number of shares is essentially the same. In other words, each share represents more and more value. The next thing that we need to have is stocks need to have value. And this in some ways is related to being scarce. In other words, scarce things have value by themselves. However, there is this thing called intrinsic value, which is related to the productivity of a business, the actual benefit that someone derives from the product or service that a business is providing to people. And so it has to have value. And that is in some ways subjective. However, the market and investors decide that. And the third thing that is the most critical factor for stocks to go up is that stocks need to be in demand. In other words, people need to be interested day after day to come in and look at the first two aspects, which is there some level of scarcity? Because who wants to own something that somebody can issue like water, which is like it's everywhere, and there's no real scarcity to it. And second, who wants to buy something that has no value? I mean, maybe dirt or something like that. These things are never going to hold their value. So you have to have something that's scarce, something that's valuable, and then you need people to come and demand it. And it's the process of being in demand day after day that causes the value to go up. And during periods of fear, which are driven by emotion, well, the first thing that disappears is that it's stocks are no longer in demand. So there's no longer anyone willing to bid it up. Instead, you have the reverse. You have people willing to bid stocks down. And to the extent that the first two things don't change, which is that they still represent value, and second, which is that it's still scarce, and of course it can actually become more scarce to the extent that people are buying back stock at very cheap prices. Now, actually, the scarceability element of going up is actually even better into these things. Now, it just tells you that as the demand comes back in, stocks will go up even further. And I believe that what we're seeing now is just really, in a way, normal business. I've told you before that the people that run the market makers, the insiders, they have special rules. They also can do things that we have no idea about. And it's, to me, no coincidence that what happened with the market going down happened during a period of quiet when companies were unable to buy back stock. And so as a result, really, there was kind of like an open period when you could move stocks down in a very big way very quickly. Now you buy in all those cheap stocks, and now as people come in to buy, you mark them up, and of course you make the money. So I've been telling you, which is the readers of all of my services, that if you want to make big gains, ultimately, there's nothing that you can do about these moments in time. You have to sit through them. You have to accept the volatility. This is the price you have to pay to get big gains. And if you sit there focused on small losses or temporary losses, you can never really make money in the stock market. The big money is always made by largely sitting in these stocks and just allowing these moments to pass. So I want to make this quick market update for you to let you know what's going on and what had happened. And I'll try and make more updates for you in the future. Until then, this is Paul Mampilly signing off.